Hello and welcome back to another episode of Darwin Investors. Yikes! This market has been brutal this month. Now, yeah, sure, I'm like anybody else. I've had a lot of unrealized gains, but the key word in that sentence is unrealized. What I really count as gains and losses would pretty much be my realized gains, the gains that I can't have back. And the stocks that I buy, I expect that if I have to wait some time, I'm going to get my money back because I understand the valuations. And it's at times like this where I think we need to just kind of get back to basics. We're like losing a lot of money. It's like, what's going on? Maybe we're Googling Warren Buffett more on YouTube going, okay, I thought you were an idiot a year ago. Now go, Warren, please get me out of this. What do I have to do to make money? I'm losing everything, right? But don't worry, I got your back. Today I'm your Warren Buffett. So let's just go ahead and relax and just focus on the companies that we own. What are they? So what happens is if your company that you own, if the company does well, if the company makes money, then the stock will eventually do well. You may be buying it for too high of a price today, but it'll eventually, if it continues to make money, your stock will make you money. In the meantime, you can hedge that stock. You might be able to sell puts against that stock. You may be able to sell covered calls against that stock. You may be able to buy puts against that stock. If you're that confident, I don't generally buy puts, but I'll sell them and I'll sell covered calls. This is called selling short against my long positions. And that's how I'm going to be making money in the stock market here going forward. So let's go ahead and see the reason why we came here. Let's go ahead and play earnings. Let's just see how I did with Union Pacific last week. And what's my next play? Of course, is Microsoft because that's in the thumbnail. So how did I do with Union Pacific last week? Or how did I do overall in the stock market last week? So when we last left off from the 3rd of January through the 14th of January, I had made $24.59 in unrealized gains, realized gains. Those are my total gains this year. And so if we fast forward another week, it's from 24.59 to 26.64. So I made $205 last week. Now I could have made a lot more money last week, but I made some mistakes. One of the mistakes I made was that with Union Pacific, it was like one of the only stocks that actually went up last week. And I had the right stock, I just didn't play it right. Because the stock market's a game of aggression and patience. Now I have the aggression part down, it's the patience part that I lack. But it's hard to have both, honestly. And so for me, I just lean towards aggression. So apparently I bought this right at market open for $244.80, and if I just waited a few more hours later, I could add it for $237. On January 20th is when their earnings came out, and it went from 237 pretty much up in a straight line to 244. Now it could have gone down in a straight line to 230. So because that's why playing earnings is a bit of a gamble. You never know what direction it's going to go in. The options have a lot of volatility price baked into them. It's why I'm saying I'm not a financial advisor. You shouldn't do this. As a matter of fact, I'm advising that you don't do this. But if I didn't know how much I was going to end up liking Union Pacific, I would have just waited until after earnings and sold a covered call here. But I didn't do that. Now I know I love Microsoft, so I'm going to sell a covered call after earnings. But with Union Pacific, I didn't realize how much I loved them. And so what is it that I loved about Union Pacific? Well, Union Pacific is got a very good moat. Like, how do you compete with Union Pacific? So all you got to do is this. You just buy a bunch of land, like more land than you could ever imagine. And on this land, you get all the mineral and oil rights. And then with this land, you go ahead and you flatten it. If you need to build a bridge across a river, you do it. This bridge has to be strong enough to hold a train. And should you come across a mountain, no problem. Just put a hole right through the middle of it. Or build bridges that go around it and mow down all the trees, however you got to do it. And then once you do all this, then go ahead and build train tracks on all your land. And then after that, you got to buy trains. And so I started thinking, man, oh man, I really like this company in these times, because the market is one of these things. It's an ever evolving thing. Certain things you like one day, maybe you don't like another day. But right now, I'm liking trains. And they're also a very sneaky, environmentally friendly type of play. I know they run on diesel, but is it more of a clean energy play to run one train from, say, San Francisco to Omaha, or is it more environmentally friendly to run, say, I don't know, 10,000 trucks? And so obviously the answer is a train. And so it's difficult, if not impossible, to compete with Union Pacific. And they just buy up all the other train tracks as well. The other thing that they do is that they have stock buybacks. Their stock buybacks are quarterly. So every single June, September, December, March, every quarter they do a stock buyback. Every single one. And their stock buybacks get bigger and bigger with time until finally now they're over $1 billion. And now they're routinely hitting. This one was $5 billion right here. Of course, the next one was $300 million, but still a lot. Chump change. And then after that, they had zeros for the pandemic because nobody's making any money. And then they're back in the billions. And so we're talking about a company that has a big moat you can't compete with, buys back shares, has $1.18 per share for a dividend. And I started to fall in love with this stock. So I didn't make as much money as I could because I fell in love. And so why did I fall in love? Well, a pimp's love is very different from that of a square. And why is that? Well, it's explained very well here by Stinky Dong Man. A square's love is usually unconditional and often based not on the object of their love, but an idealized image of them that they've conjured up. So that would be like some like Nano Dimension or something, or like PaySafe. There are certain stocks out there that you just decide that you're going to love, and you follow them to the end. You're going to go to zero with them. It's unconditional. But for me, I was ready to cut ties with Union Pacific, but they kind of got a pimp's love. And the pimp's love is extremely conditional. They give companionship and affection in exchange for generating revenue. So when I look at Union Pacific, let me show you what I did last week with them. So Union Pacific is one I could have made a lot more money than like $200 or whatever it ended up being, because I fell in love with them. And so I bought them for $244.80. I now have a transaction total, so like a cost basis of $243.64, meaning I only made $116 with them. And so basically what I did was I sold a put for them at $237.50. This is when I didn't love them, okay? I sold it for $237.50, and it had a strike price of $193. I did it on the 18th, and it had an expiration date of the 21st. Meaning if it finished below $237.50, I'll have to buy 100 more shares of Union Pacific, but I still get to keep $193. But of course, it didn't finish below $237.50, so I ended up buying back that contract for $10.65. Here it is right here. So I made $183 there. But this is where it starts to get a little bit sticky. So before earnings, remember the earnings were on the 20th, and they went up in a straight line. They could have gone down a straight line, but they went up in a straight line. This is just something I thought could happen. Not financial advice, not telling you to do what I do. As a matter of fact, telling you not to do what I do, but this is what I did. I sold a covered call at $242.50, meaning that if it finishes at, say, $245, I still have to sell 100 shares for $242.50. For me to take this bargain, somebody else gave me $209. So I took $209 for a covered call. So this was my hedge, my short. This was my short, basically my short against my long position. It's called selling short. And so I took $209 for that, meaning I had a break even of $244.59, right? So it's the $242.50 plus a $2.09 per share. So I had a break even at $244.59. Well, they reported earnings on this morning, and their earnings were fantastic, and of course they were, right? What else are you going to do? Where else are you going to put your 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 stuff, right? And so, of course, it was good. So it was 195 was what I had to buy it back for. So I made $14 on that exchange. Now, this is what the interesting part is. There's a couple interesting things here, but one of them is then I go ahead and rolled it up, and I sold another covered call for $245. That was the strike, and I sold that for $89. And so why did I not get 209? Well, this was after earnings. You pay a price for volatility. This could have easily gone down as much as it went up. Earnings came in positive. You lost money on volatility. And so I lost a lot of money, but I decided I don't want to lose this stock. So let me just get your $89 and I'll keep my stock. Well, I could still see it was kind of going south on me, so I bought it back again for 82, so I only made $7 here. And this is where it temporarily went south on me, was that I set another strike price for $247.50, and I sold that one for $40.35. By this time, I had developed a pimp's love for the stock, and I was not going to let it go, and I'll tell you why. Even if I had to buy it back, and I'll show you why in a second, why I wasn't going to let it go. So I ended up buying it back for $179.65. So I lost $139 on this transaction. But why would I do that? Well, I would turn around and I would sell another covered call and get $52 and get that. But I would also sell even an additional covered call against the stock that I own. And what can I get for that? So let's just see here. I got, let's say I do Union Pacific with a strike date of the 4th of February, which is 2 weeks from now. And instead of 240, I want to make $500 on my underlying. And so I set a strike of 250. I'm going to get $500 for the underlying now, $372 for the covered call, and $160 that I've already made. So now we're looking at pretty close to $1,000. So I'm going to get my $1,000 out of Union Pacific. You will pay me and give me my money back, and I will be able to put that money back into the market buying stuff on the way down. And that's my plan for Union Pacific. And so you may say, well, what you only showed me $150 worth of gains and you made $205. Well, yeah, there were other things that I did. Let's just see here. So something else that I did last week was I also, of course, sold a put on NVIDIA. Sold it for $251 with a strike of $247. NVIDIA's like currently sitting like $231. It's why you want to get in and out of these things really quickly. Do not get too greedy, okay? Greed is the enemy of making money. And so I bought it. I bought 20 shares of NVIDIA last week because that's part of my strategy. I'm going to buy a little bit of stuff I like on the way down based on the valuation of the company. And so I'm only bought 20. I still have a lot of money left. And then I went ahead and I sold a put for $251 and bought it back for $123, making about $128. And I think I did something similar for Lowe's. Let me just see here. Lowe's, I ended up last week selling a put for $59, buying it back for $46, and made $12. And so that would be what I did last week. So basically, I'm just kind of nickel and diming, making my money, waiting my time, waiting for stuff to pop back. And we're talking about Lowe's, NVIDIA, Microsoft. You know, these are companies that I know in time are going to make money. So what's my play for next week? Well, I went through, you go through the earnings calendar, and these guys never want to give me everything I want to see. And I look and see what's on the horizon. Now, granted, I said, yeah, I'm going to play Microsoft, but I already know me, and I know I'm going to play something else. I just don't know what else it is yet. And so I look through Monday, and nothing here looks particularly intriguing. Hope. Okay, that's what you need is hope. I'm not buying them. Jeez. About the 25th here. You got Johnson & Johnson. You got Verizon. None of those are exciting. GE. Lockheed. Ooh. They could be interesting and make some cash there. Let's see. American Express, retail sales, travel. I don't know. I'm not feeling really warm and fuzzy about that. Raytheon always disappoints. PACCAR, there would be like they would be a competitor to say Caterpillar or Deere. They might actually be good. Keep an eye on PCAR. That might actually be a decent one for next week. And of course, the one that I ended up going with is Microsoft. Microsoft for a lot of reasons. I mean, geez, I love Microsoft. They're the best company. And so when I look at it, not only am I getting the company I like, I'm getting the setup that I like. So you're talking about we've got a technical setup of about 295. And so I'm like, wow, we're there. We're already at the bottom. And because of that, and I'll be honest, I was setting up for earnings with Microsoft, last week when they were at like 314. I thought, how low can it go? Well, I know how low it can go. I can look at the things and realize that Microsoft can go clear down to 223, really. But so I already set up the deal. I already bought the 100 shares a long time ago, a couple weeks ago, and I've already sold the put. I sold the put on Friday, sold it yesterday for $295. Would be the put strike price, meaning that if it finishes below 295, I buy 100 shares of Microsoft, which I don't care if that's a good price. It's a really good price, actually, and it expires by next Friday, and I sold it for $764. So meaning if it finishes above 295, I still get $764. And so this time I'm not going to screw up because Microsoft already has a pimp's love. So I'm not going to like go ahead and sell the covered call on Microsoft until after they report, because I already know what's going to happen. And I'm going to show you why I know what's going to happen here in a second. Microsoft's going to do this. They're going to gap up big. And I don't know where to sell this covered call at to still maintain my shares. And so, like unlike Union Pacific, which I could care less about this time last week, I have a big affinity for Microsoft for a lot of the reasons. Let's go over some of those reasons right now. One, Microsoft does not sit on their cash. They're not like Berkshire Hathaway, sitting on like $150 billion, sitting there collecting cobwebs. No, when they get a heap of cash, what do? They buy Activision, $69 billion. And look at this, an all cash purchase. You talk about a flex. I mean, we're talking about a company that they're saying, we're going to buy your company, one of their big competitors, for $69 billion. And we're going to buy all your talent, all your people. And it's like, well, you're going to do it in stock? No. Do you want big bills, small bills, Dogecoin? Like, how do you want me to pay for this? We got the cash on hand. We're not going to let us sit there and collect dust. And that's why I love Microsoft so freaking much. And there's a lot of reasons. So then they buy Activision, and look what happens to Activision stock last week. It goes from like, what, $64 to what is this? 64 up to, I don't know, it's about a $30 increase. And so what did this? Okay, that's what you call a short squeeze. So they stuck it to a bunch of hedge funds. And so that's another reason I love Microsoft, because they stuck it to the man. They all these people are like, oh, Microsoft just bought Activision when I have to cover the short. It's like, okay, it's sent it up in a straight line. Because all those people were like counting on Activision to go down to zero, and it didn't happen. I love that about Microsoft. If you look at Microsoft, we're talking about an already massive company. But my gosh, look at their revenue growth year after year after year after year. It just goes up and up and up. And because they're always coming up with new and innovative ways to make money. If you look at something like McDonald's, if all they ever did was make the hamburger and the cheeseburger like they did way back in the day, would they ever be the company that they are today? No, they wouldn't. But they've innovated. They added breakfast. They added, just... you name it, they add stuff to their menu to increase what's going on with McDonald's. It's like, okay, well, they've added everything all over America. I guess they can't expand anymore, right? Well, no, there's hundreds of other countries out there. They can expand. You're not looking hard enough, right? And that's what I look at Microsoft. It's always like, they're big. They can't get any bigger. Oh, you bet they can. How are they getting bigger now? Well, they're getting bigger now because they're actually stealing. Well, first of all, they buy other companies like Activision and Blizzard. And secondly, they steal from others. Like here is Azure right here. It grew 50%. This is their cloud service. This is the one that competes with Amazon Web Service. Why do you think Amazon's going down? Amazon's a very low margin business. E-commerce is low margin. And so they also own Whole Foods, low margin. Where do they make, where does Amazon get a lot of their money from? At least their margin and like they get it from Amazon Web Services, and Microsoft is coming in here and hammering them. Same with Google Cloud. And so why do you think Amazon's going down? It's because Microsoft is beating them up, as is Google. And when you look at this, Microsoft's cloud service revenue grew 50%. What is it, first quarter or something like that? Oh no, last quarter it grew 51%. Overall, Intelligent Cloud grew 31% with $17 billion in revenue reported. Microsoft Azure revenue growth rate continues to hold steady. Azure revenue grew 48% in Q1 2021 and grew 51% last quarter in Q4 2021. That is incredible. And then when you, I'll do another video on how to value stocks. But you can go to their Microsoft page. You can go to this for any public company. You just type in the company name, and you type in investor relations and SEC filings, and then you can go to their 10Q and get their most recent 10Q. And when you look at Microsoft, you see their total revenue here. First of all, it's just gone way up. Here's 3 months ended last year, 3 months in 2020 versus 2021. Major growth. Total revenue, $45 billion. Now, that's not the most impressive part. Let me show you the most impressive part. Net income on $45 billion was $20 billion. That's like a 40% net income. Nobody else can hold a candle to that. And why is that? Well, a lot of it has to do with this web service building business that they've got. I mean, Azure is just like, it's all profit margin. It's what was keeping up Amazon for so long. And so when we look at them, they say that server products and cloud services revenue increased 35%, driven by Azure and other cloud service growth of 50%. And so look at this here. Microsoft Cloud gross margin percentage decreased slightly to 71%. Their gross margin decreased to 71%. For every dollar they're getting on their cloud stuff, they're only getting 71 cents, and that's a decrease. You talk about cry poor little rich boy. I mean, this is incredible. And so for these reasons, I absolutely am going to go all in on Microsoft for this Let's Play earnings this week. So if you got anything out of this video today, please like and subscribe. We'll go ahead and review what ended up happening with Microsoft in like next week's video, and go ahead and hit that little notification bell. In the meantime, I'll go ahead and leave you with this.
I like to dress nice.
Oh, you do?
Platform shoes, rings, and a pharaoh's beard. And oh yeah, I flash my ice. Damn it, woman, I am a man to be feared.
Oh, you scare me, baby.
But when the sun goes down and all that money is piled up on the dresser,
Dinero.
you see, a man works hard for his woman in town, and I don't want to come home just to second guess her. So you better not second guess me.
Never.
Cause one thing that me and you can both agree, that when you see these tears in my eyes, just know that all the rumors are lies. Cause pimps don't cry. Pimps don't cry. Pimps don't cry. No, they don't. They never shed a tear. Pimps don't cry. They never shed a tear.